Welcome to the Trading Bell Show. I'm here at the office of Shaka Kariuki, the CEO Kuramo Capital Management, and they've just released their management impact report under Kuramo, and I'm here to keenly to just ask him about some of the details of the report and of course get into the conversation and more. It's good to see you, sir.
Always a pleasure.
Welcome, sir.
Thank you very much.
Welcome to the show. Karibu sana.
Asante
You
sana.
can have a... Good to see you again.
Good to see you as well. Thank you.
Well, I'm sure when I mention Kuramo to the people, one of the questions they would want to know is what Kuramo does as Kuramo Capital and who they are. So in your own words, how would you introduce to us Kuramo Capital?
Thank you very much.
Yeah.
Kuramo is a private equity group. We make investments across Africa. We mainly get our investments, our funds from foreign institutions, be it endowments and foundations globally. And those are the funds now that we turn around and make investments into the various companies.
Okay.
We currently have invested over $500 million across these markets with actually 35 investment companies across the continent.
Okay. Let me ask you about your direct investments here in Kenya. Are there some examples you could mention?
Sure. We have a number of various direct investments in this market. For example, we are recently or well known for TransCentury being one of our investment companies. Yeah. We have Starting Capital, we have Gen Africa and so forth. Okay. But not just in Kenya, we have companies, investments in Ethiopia, for example, in DRC Congo, in Zimbabwe, and obviously in West Africa as well. Okay. And we also invest across various sectors. Okay. We are sector agnostic. So we are focusing, well, we have investments, for example, in agriculture. We have investments in manufacturing, in banking, even in the aviation industry, and so forth, yes.
Now that's good to know. And you know, speaking about sectors, and now that you have released the impact report, which really draws a lot of your work and what you have done, I'm curious to know about some of these particular sectors that you've mentioned. And we could start with the agricultural sector. From your end, how has this been aligning with your overall ESG strategy?
Thank you for the question. Agriculture, the agriculture sector is a key sector for us. Yeah. We've made a number of investments in that sector. Yeah. For example, in East Africa, actually specifically in DRC, we own the largest palm oil production company in that country. Okay. That we've owned for a number of years now. Okay. That's doing relatively well. Okay. We have various other investments in the space as well. Okay. But to be specific to your question, yes. You know, in 2022, for example, we invested more than 12 million, actually $13 million in the agricultural space. Yeah. And that demonstrates our commitment to supporting sustainable food production, rural development, and environmental conservation in these markets.
All right, and that's a very good question. I mean, good answer. Speaking of which, such investments, and we hope they can happen even in Kenya, really, would really, you know, integrate a lot of job creations, which drives me to the question about job creation and how Kuramo Capital's initiatives contribute to job creation, whether they are temporary or even permanent.
You know, that's an excellent question, because honestly, the heart of the matter is it comes down to job creation. You're right. So any of the investments that we're making, I'm always asking myself, are we being able to create jobs? Yes. It gives me great satisfaction when I drive or walk into any of our investments and I see the parking lot is full of cars. Because that tells me that we are sustaining employment, that we are creating employment, and that has a compounding effect or impact on not only the individuals that are employed by those companies, but also now their households, etc., etc. Absolutely. So now, specifically to your question, as far as job creation. So for example, in last year, our efforts through our various companies that we invested in, we have created about what? Temporary jobs was about 142, almost 143,000 temporary jobs. And in addition to that, we created 46,000 permanent jobs. Thus, and as a result of that, strengthening the local economies. And really, when it comes right down to it, playing our part in ensuring that we are creating opportunities for the populations in the various economies that we are making investments in.
Wow. Congratulations on that, and we really hope you can keep doing that, because job creation is really at the heart, not only even of this country, but even as a globe and a challenge.
Yes, that is something for sure that you know, we continue to do.
Yeah.
We wake up every morning
yes.
thinking about, especially in these tough economic times, thinking about how do we create employment or create those opportunities, and how do we make them sustainable. Yes, there's a lot of temporary employment that we create, but even to me more importantly is how do we now translate those or I guess transform those into permanent opportunities for individuals.
Absolutely.
Yes.
The education sector as well, I'm sure you have a touch on that and you have an impact on that. I'm curious to know as well how Kuramo Capital investments in the education sector is fostering social and economic growth.
Fair question, and actually very important question, because education is something that's dear to my heart, because education makes all the difference.
You're right.
And when I talk about education, you know, there are many facets of education that you can mention. So as Kuramo, we've currently invested about $45 million just in the education sector, which to me demonstrates our commitment to this sector, because we know it leads to skilled workforce. And that's the reason, for example, we are able to create those 46,000 permanent jobs and over 100,000 temporary jobs over the last year.
Okay. You know, one of the key things as well that is on ESG's matters governance, and corporates have been looked at how, you know, internally they are doing their governance. One of the things that we have seen is things to do with gender diversity and you know, corporate leadership as well, and those elements. So how is it at Kuramo Capital, you know, in contributing to gender diversity in corporate leadership?
You know, gender diversity is a key element that contributes to the success of any business. Kuramo being no exception, as Kuramo as a business itself. So over the last, you know, since we started making investments on the continent and Kenya specifically, one of the requirements that I always request our investee companies is to ensure that we are all moving towards the 50-50 in terms of gender balance in the organizations. Across all our boards, for example, they have to have female representatives as directors. So that's again another requirement. And we just don't talk the talk, we actually walk the talk, if that's a saying. That even as Kuramo, 47% of employees of Kuramo are actually female. And we actually take a bottom-up, but also a top-down approach. So at Kuramo, if you remove the three founding members of Kuramo, who are male, and look now at the managing director level, and managing director level, 50% of managing directors at Kuramo are female. You go to the next level, 50% of the directors at Kuramo are also female. And even at the vice president level, I think the difference comes in the analyst and the associate levels, as far as maybe slightly a few more male than female. But again, when you aggregate it all, 47% is actually female. And as a matter of fact, in our portfolio companies, even there, we now you know, some of our CEOs of the portfolio companies are also female. But I also take a step further, and I do this with our investment companies. And that's one of the reasons why I like to sit on the HR committee if I'm able to, is ensuring that when we are doing the hiring process, that we are being very careful as far as how we do that. Because what I found out when I started looking at the analysis is when you do an advert there for some hiring, 50%, and you get, say, 1,000 people apply. Interesting enough, 50% of those will be female, if not higher. You know? And then ultimately, when you get to the final 10 that's selected, you find that maybe 10% are female and the 90% are male. Then you say, hold on a second. Was it a qualification issue? The answer is no. Everybody was qualified. That's why they applied in the first place. So where are we losing the gap? Where are we going wrong? Or where is the mismatch? Where are we ending up on the front end, the application, it's 50-50. But when you come to the final list, it's, you know, 80-20 or something like that. So we now start asking deeper questions and now trying to figure out where in the interview process is this mismatch coming into play, and then resolving that so that we can now all proceed towards the 50-50 goal of as far as gender diversity is concerned.
Wow. Okay. I'm curious to ask on a more specific question on the same.
Okay.
Are there any strategies that you're employing to support and empower women in the workforce? Okay. I'm curious to ask on a more specific question on the same.
Okay.
Are there any strategies that you're employing to support and empower women in the workforce?
Again, thank you for that question. Over the last year or so, our support over 17,000 women jobs, it reflects our commitment to gender equality, economic empowerment, and fostering inclusive workplaces. To achieve gender equality, we need to mobilize not just parliaments, but populations, not only civil society, but all of society. Because that's an area that's actually very important for an economy to thrive. Thank you very much.
Yeah. Speaking about looking at a balanced society, one question I ask is, are you concerned that we have, at some point in very many spheres, not just you, in very many other spheres, we have really uplifted the female gender? What about the male gender? I've seen initiatives where they're talking about the boy child as well. Does that concern you?
It concerns me. And I know it's also a concern for many members of society, especially here in Kenya. Yes, the boy child needs to be taken care of. Okay. As much as we talk about gender balance and the girl child, there's concern about the boy child and ensuring that they have the skills, the necessary skills that are going to enable them to take up these jobs. Okay. And that's why, for example, especially in the manufacturing sector, with our manufacturing companies, we ensure that we are going out there and providing the opportunities from a training standpoint, because some of the jobs the boy child might be attracted to, they aren't training opportunities. Okay. We create those opportunities for them. Okay. But again, when it's all said and done, we are really not trying to discriminate between the boy child and the girl child. We just try to make sure that there is an equal balance.
Okay. Yes. Level playing ground. Absolutely.
Absolutely. Level playing ground.
As we come to the end of this conversation, let's talk about your, looking through your entire ESG initiatives. How has your approach contributed to building long-term sustainable value for both investors and communities?
Okay, thank you for the question. Yeah. I would have to say that our holistic ESG approach, encompassing investments, job creation, environmental protection, and social development, it positions us to generate lasting value, aligning financial goals with societal and environmental well-being. So for our investors, it allows them, to our investors actually, this is an assurance that we are here long-term and we should be in a position to provide risk-adjusted long-term returns, attractive long-term returns, and the investments that we've made across the board.
Okay, Shaka, finally, as we come to the end of this conversation, where do you see Kuramo 5-10 years from now?
Thank you for the question. As Kuramo, we are a private equity group. We will continue making investments across, mainly not only in Kenya, as a matter of fact, but also across the African continent. And as we do that, our goal is to ensure that we're investing in businesses that hopefully we can now be able to take to the next level. Some of these businesses are growth companies. They're already successful in their own right, but we still try and make sure that they get to the next level. Some of the other businesses are businesses that are struggling, and even those ones that are struggling, we ensure that we can still get them to the next level. Because as we do so, we are also protecting the employment of individuals in those organizations. And that's always critical to me, that the companies do well, that they continue to innovate, that they continue to create employment opportunities, and that over time, we are now in a position to make solid returns for investors as well. Because it's not just about Kuramo, it's also about the investors that are funding Kuramo in order for us to be able to make these investments.
I feel like I should tap in one piece of advice from your end. You have seen an array of companies, many of them, some struggling, some you have come in and helped them not to remain afloat and the likes. What's the one thing you to be asked for any person who is in business, running a company, what's the one piece of advice you'll give them that make sure you check in on this particular area of your business? Otherwise, it might end up coming to bite you.
Integrity.
Integrity.
Make sure you're always dealing with people with integrity.
Yes.
That makes all the difference in business.
Wow. Thank you so much, Shaka, for your time.
Always a pleasure. Thank you, Kendry.
There you have it, Shaka Kariuki, the CEO right here at Kuramo Capital, and speaking about at large on their report that they just released, looking overall at their ESG strategy and wishing them well, very optimistic about the future.
Welcome to the market highlights. My name is Samuel Gishohi. We've seen week on week market has remained quite stable with a bit of a decline on the NSE 20 index. Most of this has been caused by sustained sell-offs. Foreign investors have continued to sell, even as we see the shilling still under pressure from the dollar, mostly driven by interest rate hikes by the Fed, and this is mostly causing the shilling to lose value against the dollar, which causes a lot of foreign outflows. Apart from that, what is exciting is we have now seen the half-year results for most of the listed companies coming out, particularly the banking industry, in which we saw all the banks giving us double-digit increase in profit, mainly backed by the fact that we have seen them getting higher interest rates from investment in government securities, but also driven by the fact that most of the banks are also increasing the lending rates to their customers. That will also have driven their profits higher. And of course, on non-funded income, we have seen a lot of these banks also getting a lot of income from the increased spreads when they're trading, especially on the shilling and the dollar. That is expected to sort of slow down as we go into the rest of the year. What is of note is that in as much as we are reining in inflation, we are still expecting to see disposable income reduce. This has largely led to very low volumes on the market. So the excitement that we would have expected in these announcements of double-digit increase in income from the banking sector has not really been seen, because then at the same time, even with good interim dividends being seen in some of the counters, we still haven't seen that excitement because considering we have recently had an increase in tariffs and deductions from salaries. In the finance bill, we have also seen taxes go up. We have also, and because of inflation, we have also seen a decline in disposable income that is available to investors. And so most investors have taken a wait and see stance on the stock market. That is also driven by the fact that interest rates on bonds, for example, the 1 year T-bill is currently sitting at around 14%. We expect that to also continue to increase. And so that will definitely see flight of capital, where investors will be moving more of their funds away from shares to the less risky and higher yielding short-term interest rates and bonds. Apart from that, outside the banking sector, most of the companies that have announced, the agricultural sector and the manufacturing sector, most of them have seen a declines in profit, and this is expected to continue as, of course, the geopolitical effect on our economy, the increasing interest rates start to reduce the ability of investment. They start to reduce disposable income in the pockets of the public, and therefore most companies will expect to see a slowdown in their growth in profits, and probably we would see some profit warnings going towards the end of the year. That said, the market remains very subdued. We are seeing very low volumes in comparison to what we would expect in a normal market. And we don't necessarily expect to see this change in the short to medium term, because we still expect an increase in interest rates both in the US, which also pushes inflation or exports inflation in the US to the rest of the world. And because the shilling will now come under more pressure, we would expect to also see interest rates locally continuing to rise. In as much as we are reining in inflation, we still see quite a bit of pressure on the economy as we go towards the rest of the year. Thank you very much for having me.